All right, hey everyone. I am here with my good friend Janice Cohen. She is a reverse mortgage specialist with Mutual of Omaha. Janice, thank you so much for coming on today.
It's my pleasure. Thank you for having me, David.
I'm very fortunate to have you. And look, I know I'm of the age now where I now qualify for reverse mortgage, which is hard for me to understand. I know a lot of people that we are talking to qualify for that. So I figured it would be a good time to kind of talk about it. But can you give us just a quick overview of how a reverse mortgage is different than a regular mortgage?
Sure. So, a reverse mortgage allows a person over the age of 55 in some cases and 62 in a different case, which I'll explain in a moment, to tap into a portion of the value of their home and to receive money rather than writing a check every month or making an electronic payment on on a traditional mortgage each month. And it allows you to either receive money each month or to extinguish an existing mortgage or to just open up a line of credit, whichever strategy is really going to work best for you. Um, the One of the huge differences between a traditional mortgage and a reverse mortgage is that when you apply for a reverse mortgage, while we do need to know that you have enough income to pay for your property taxes and your homeowner's insurance, we're not vetting you for the purpose of making sure that you can make regular repayments on a mortgage because there are no payments that are expected or required on a reverse mortgage. The only
I can make a payment, but I don't have to. And if I don't, it just goes on the back end of the loan, correct?
Exactly. You can make a payment. And if you do, hooray for you. What that's going to look like is that your line of credit is going to increase by the amount of money that you've repaid. A lot of people always ask, can I make repayments on this? And the answer is yes. Not only that, but this money that you receive is tax-free
Mm,
money.
that's
Uh,
huge.
which, it's huge. It's
If you
absolutely
sold your house, you'd have to pay a gain on that. But if you do the reverse, you're taking a loan, so there's no capital gain. That's good.
exactly,
Yeah.
exactly.
Well,
Um,
this and then what's the normal like? Is it what 80%, 70% of value? What's the general range for how much you can borrow?
Well, I want to begin by saying this. Every person who applies has a different LTV based on the date number of days till they reach age 100, believe it or not. I mean, that's like a big difference. But I will say that generally speaking, a person, depending on their age, is able to borrow between 45% of their appraised value if they're around 55 up to maybe 70% if they're in their 90s. So, not anywhere near 80%. People are often surprised when I tell them how much they would be able to borrow. They think, oh, I thought it would be more because my house is worth $3 million and, or my house is worth $1.5 million. And it's not going to be 80%, which we're all kind of conditioned to expect from a mortgage, but a reverse is quite different. And the reason that it's so different is because if you take out a reverse mortgage, let's say you're 60 or 62, you could live till 100 or 97. And
Oh,
during that, yeah, let's hope so. And certainly let's hope we're in good health and
yes.
sharp and able to tie our shoelaces and all that good stuff. And go on the kind of hikes that you and Brooke go on, which I'm always so envious of your.
Janice is a fan.
Yes, I love it. I love the vistas and I love the breaks that you take for wine and sandwiches. Um, but when you have a long life over which time interest will be accruing on your balance, because there are no, as I said, no payments expected or required. So over the fullness of time, your home value is growing. We know this, but we don't know to what percentage it's growing by. And your reverse mortgage balance is also growing. Again, if you've done a variable rate reverse mortgage, we don't know what the rate will be year over year,
Mhm.
but you could do a fixed rate and then you would know year over year. But the amount of equity you're going to have in your home will fluctuate over the years.
So this feels like a great gap strategy, right? Like I've got maybe I'm just eligible. We've got some family expenses. Like how that sounds like some one way you could use a reverse.
There are so many terrific applications. And when someone comes to me, what I want to say is I listen to their story. Where are you? Does this really apply to you? And I'll give you an example. Someone came to me and she said to me, my husband just died. We've owned our home since 1972, and my wheels began to turn. And I said, Robin, if you have owned your home since the 70s and you paid a few dollars for it, your husband just passed away, and I'm very sorry for your loss, but you have an opportunity here. You have the opportunity to have a step up in basis upon death.
Mhm.
And I would encourage you to think about selling. So that is an example where, as a reverse mortgage advisor, I would say to that person, don't do a reverse. Do do what's really going to be in your best interest and sell this house and walk away without having any taxes. This house is large for you. That's an example of when not to do a reverse. But of course, not everybody wants to sell under those circumstances. But I'll tell you some of the common scenarios. I receive a phone call from a guy named Bill. Bill calls me. Bill is 55. And he says, I'm a successful physician. I've been giving my mom money every single month. And I love my mom. I want to see her stable and happy and healthy. Giving her money, and I have a brother who lives in his teenage bedroom. We all know people like that who have a kid still living at home, and there's really like not a whole lot of money going around. And he says, and I have a sister, and I love my nieces and nephews. She's raising a young family. She's not working outside of the home at the moment. So I'm the only one who's really in a position to be able to assist. And I'm happy to do it. But it occurs to me that I'm funding my siblings' inheritance. And I was totally okay with that. And, you know, business is fine. But the fact of the matter is, I have a son who's going to be starting USC in September.
Mhm.
And that is a really big nut to
That's not
crack.
cheap.
It's not cheap. And I would like for us to look at my mother's needs, which are only going to grow with time, as a family, and for us to equitably share in the in in her care. We're not saying she has to sell the house. We're not saying that she shouldn't be getting some help. But if we all sort of forfeit a little bit of the expectation of inheriting a paid off house, which who can do that these days, then let's do a reverse mortgage to help my mom get, just fill in that gap, because maybe some months she only needs $700. Some months she needs $2,500. But whatever it is, it's going to be healthier for her not to have that kind of handout relationship with her son. And it's better for all of her children, because when is Bill going to start resenting his brother who lives in the teenage bedroom and his sister who's doing her best also? We want everybody to feel like, okay, we're all contributing equally now.
So mom takes the reverse. She can now close that gap, but we also know quickly how quickly that gap can become a chasm. Mom gets sick, has a fall, has a stroke, who knows what happens. I would think that's the primary reason most people get a reverse is because of like medical care. Is that mostly what you see?
Yes, I see a lot of that, especially because a lot of people, most people, even if they've done everything right, even if they have a fantastic financial planner, they don't have long-term care insurance.
Mhm.
And that is a problem because care, especially if you're doing it right, and I'll get to that in a minute, it is expensive here in California. When I say if you're doing it right, what I mean is you've hired an agency. Why do I say you should be hiring an agency? Because there are very onerous employment laws in the state of California. And if you privately hire a caregiver, that person is considered an employee of your household and subject to all of the employment laws of California. And I have heard on so many occasions that as soon as the senior passes away, the senior who has been paying this caregiver, as soon as they pass away, the family is served with a lawsuit for wage and hour claims.
Wow.
And wow, that is an eye opener and a shocker.
Well, I think just you're open to so much potential fraud too. You're bringing someone in, there's no one overseeing them except maybe the elder person who needs the care, who's just so dependent on that person and will do anything they say.
Right.
Yeah.
Exactly. It's a problem. So I would say if you're going, if you need to pay for care, which many people do, and you do not have long-term care insurance, you can use your home as a long-term care insurance plan. Plan B, plan A, of course, is buying a great long-term care insurance plan. But if you didn't do that, there's hope. You can do a reverse mortgage and you can pay for the care using the reverse mortgage.
So we were talking earlier. I loved it how you mentioned that you can get a line of credit to like get ready for retirement. So maybe I don't need funds now, but I qualify. I can open up a line of credit and then use that to supplement my retirement if I need to. Can you explain that?
Yes. So this to me is one of the most powerful elements of a reverse mortgage. So for instance, very recently, I had a client. He's in fact an attorney who worked for the city of Los Angeles. He was planning on working. He's in his early 70s. He was planning on working for a longer period of time. But he started to feel like they really didn't want him around. And next thing you know, he received, guess what? We're throwing you a retirement party. Now, he's in his 70s, so a lot of people may be retired already by that age, but he really didn't want to retire. He wasn't anticipating retirement. And he had gone through a painful divorce and according to him, ended up having to give his ex-wife a great deal of assets in the divorce. So he was feeling very stuck and very frightened and said, you know, I wasn't ready for this. Now I've gave my ex-wife all this money thinking I'm going to continue working. Now I'm not going to be working anymore. What am I going to do? And so took out he took out a reverse mortgage. He had a paid off house. So he was in a privileged position. Not everyone has a paid off house. That's a really nice thing. So in this person's case, he is getting a line of credit of approximately $400,000. When you take out a line of credit, a reverse line of credit, that line of credit is going to grow each year
Mm.
at the same rate that borrowed money would be charged interest. So let's say, for instance, that the interest rate that would be charged on borrowed money is 6.5%. Well, your line of credit is going to grow to your advantage by 6.5% per year. So what that means for this gentleman is that in 10 years, rather than having a $400,000 line of credit, he will have an $800,000 line of credit. So let's say
Nothing for it if he doesn't draw down on it, right?
absolutely he is paying nothing on it if he's not drawing it down.
That's great.
And he is in a privileged position. He's even wanting to prepay his closing costs so he has a zero balance. And I said to him, you need to only have a $100 balance in order for that line of credit to stay open. If you pay your 100% of your closing costs and you have no balance, the line of credit just closes. But you need to have a $100 balance, but it's a fantastic plan,
So do you want him to
especially for people.
take $100 out, take you to dinner to thank you for that, and then you're good to go for the next 20 years.
I love that. I love a good steak, and I'm happy to go out to dinner.
Awesome. Well, Janice, I know we could talk for hours about this, so I really appreciate you carving out some time. If anyone out there sees this and wants a connection to Janice, her contact information is going to be below or in the comments below, or just reach out to me. She's one of the many people we have in our world to help you navigate different things. Janice, thank you so much for coming on today.
Thank you so much for having me, David. It's been a pleasure.
You're very welcome. All right. Thank you.
See you soon.
Bye.
Bye.